Good morning, everyone. Dr. Foster here, the success coach with MaximumChange.com. So excited to be here with you today. I wanted to jump on here and do a little bit of business one-on-one because I think that a lot of people that are starting businesses or trying to run a business, sometimes they miss the basics. Not because they're dumb or anything like that. It's just because when you start a business, sometimes it's kind of like a flood. You get a great idea, you go ahead and do it, and then all of a sudden you're like, oh, I don't know what I'm doing, and then you have to figure it out. So I wanted to jump on here real quick and talk to you about some business 101 and specifically gross versus net income. Now, I want to be very clear. I'm not an accountant. I'm not a CPA. I'm not a financial manager. But what I am is a guy that's been in business for 25 years, owned my own business for 19 years, and I think I know a thing or two about a thing or two. And so I want to talk to you about some basics that every business owner should know. And if you know this, just look at it as a primer or even a reminder, rather, of the things you need to know. So let's talk about the differences between gross income and net income. Now, these are two very important numbers that you need to know when it comes to understanding the health of your business. And also it comes into play when paying taxes as an independent business owner, and your gross income is used really to calculate net income. So you need one to have the other, and they can be easily confused. So let's talk about this. Let's talk about gross income. This is the very first one I listed. Gross income is needed to calculate net income. Gross income is the total amount of money that you have earned. And typically this is over the course of a year. Now, I'm not going to get caught up in the nuances of physical year versus calendar year, or fiscal year versus calendar year. Excuse me, not physical, fiscal, F-I-S-C-A-L. I'm not going to get caught up in that. We'll maybe do that in another time on a Business 101. But gross income is calculated over a 12-month period, typically a calendar year, but maybe a fiscal year. Again, we won't get into the nuance. And it's income before you've counted any of your expenses. So think of the gross income as a profit that you've made from the services you've provided. In other words, you do something for me and you say it costs, I'm going to charge you $100, and so I give you $100 and you go away happy, right? So this is the profit you've made from me for the service you've provided. And then so you add that to all of your other client billings. And that is, so each client paid you $100 and you had 12 clients. So you have what? $1,200, right? And so that is your gross income. Now, this is before you deduct any taxes or withholdings or anything like that. Okay, again, I'm not going to get deep into the weeds on that. So here, look at it this way. Your client billings from the past year add up to $90,000 in revenue. That number is your gross income, okay? So that's all of your client billings for the whole year added up to $90,000. Now, gross income is extremely helpful to you in that it's a way to look at your revenue potential of your business and to also assess how you're doing from year to year. So if you did $90,000 last year and you did $100,000 this year, well, you know that's a percentage increase. So maybe you could project next year that you would have that, at least that amount of income increase. So by looking at the various revenue streams, you can see what clients and what type of projects bring in the most and least amount of money. Again, this is a place to measure the health of your company. This can influence where you direct the majority of your time, your effort, your energy, your influence on your future business, okay? So that's the gross income. Now, let's talk about the net income, which can only be calculated if you have a gross income, all right? So really important. Coffee is really important too. Net income is the profit that your business earns after you've calculated the expenses and allowable deductions. Now, again, I'm not going to get in the nuances of allowable deductions. You'll need a CPA or an accountant or somebody to help you with the allowable deductions. I'm not here to give you tax advice. I'm just here to give you a 100,000-foot view of Business 101 and what you need to know to run your business effectively. So net income, again, is the profit. Remember that 90,000 less any expenses and allowable deductions. Now, to calculate the net income, you take that gross amount, the 90,000, and subtract your business expenses, which could include marketing, advertising costs, travel, office expenses, tax payments, and so on, as well as any deductions that you may be eligible for, such as home office expenses, retirement plans, legal and professional fees. And I want to let you know, if, like me, you work from your house, okay? I have an office space that is, I don't know, 500 or 600 square feet of my house that I use specifically and 99.9% of the time for my business, okay? Now, the IRS, and again, I'm not trying to give you tax advice. You need to get a CPA to help you with this, but the IRS at this point, or at least last year, allowed me to take a percentage of the household expenses and put it toward this office. So if I spent $1,200 on the water bill, okay, it's a little high, but all right, electric bill. Let's say $1,200 on the electric bill. And my percentage of this office space was 7% of the entire house. I could take 7% of that $1,200 and put it toward an office expense write-off, okay? Again, you need to check with your CPA and find out what's right for you and how that works. But that is part of the expenses that you're allowed to take as a deduction. You can also take off retirement plans, legal and professional fees, and so on. I mean, there's a whole litany of things that you could write off as expenses for your company. So if your company business expenses for the year total $30,000, your net income is $60,000. Where did I get that from? $90,000 gross minus the $30,000 total expenses gives you $60,000 in net income. Now, net income can also help you understand the health of your business. If your gross income is significantly higher than your net income year after year, you may want to evaluate your expenses. Go line by line to see what you can eliminate and cut out of your business. Now, here's something that is really important. When I ran businesses, and I've run several businesses over time, I have helped organizations from actually being an employee to being a consultant. And here's the thing I've learned. You can go into a company that's been around for years and start looking at their expenses, and you can find cost savings. Examples would be that maybe your cell bill can be reevaluated. Maybe you're paying too much. It's time to reevaluate how much your company's spending on cell. You can also look at how much you're spending on telephone service. Now, in the advent of voice over IP, VoIP, VoIP, you could probably cut your expenses drastically by going to a voice over IP system. I'll give you an example. I use Google Talk, okay? Now, for Google Talk, I get unlimited free phone calls in and out if it's local, okay? Now, if it's international, I have to pay for that. And because I'm a home office, so I have Google Talk, I don't pay a phone bill. And I do all of my communication through this microphone. And when I do video conferencing, I use my Logitech camera that you're watching me through. I make cell phone calls that do not cost me anything more than my monthly expense. And by the way, I spend like, I think it's $40 a month on unlimited talk, text, and data. And I have a family plan, by the way. And I write off that portion on my expenses. But I have gone into companies and literally found hundreds and hundreds, if not thousands of dollars that you could save just by changing the way you do business. Right down to how much money is spent on ink and toner and paper and office supplies. One of the biggest wastes in companies is office supplies, because what ends up happening is John down the hall needs a pen, and Susie down the hall needs a pen, and they go to the pen locker or the supply locker, and John sees, oh, there's no pens. So he goes and he orders pens. Susie goes to the locker. She sees there's no pens. She orders pens. A week later, you have 5 dozen pens. But Bill, next door to Susie, says, hey, I need a pen. And Susie says, oh, we're out of pens, because she doesn't know that we've already got 5 dozen pens. And so then Bill orders pens. You see, what I'm saying is, if you don't have systems in place to control expenses, then things get out of hand. I ran an organization once where I literally cut the office supply expenses down by over 50% just by walking in the door. I have seen enormous amounts of expenses cut just out of inefficiencies and not negotiating rates on things. For example, you should be looking at what you're paying in insurance and liability and all those things at least once a year, reevaluating them. Your health care, make sure you're paying the right taxes. You don't want to overpay for anything. You also should be renegotiating your rent, because here's the one thing I know about office buildings. They don't want to lose you if you're there, especially if you've been a long-term customer. So maybe you could renegotiate your terms of your lease. And that means that you'll have to renew your lease and so forth. Now, if you work from home, good news. There's very little overhead for running your office at home. I've got a printer. I've got internet connection. I've got cell phone. And I've got a few other minor expenses that I pay. So my overhead is really low. The deal is you want your gross income and your net income to be pretty close. So if you can minimize your expenses, that's great. Keep in mind, though, the more you have in net income, the more you're going to pay in taxes. All right, let's continue on with this. Your net income can help you understand the health of your business. If your gross income is significantly higher than your net income, year after year, you want to evaluate those expenses, as I've said before, and you want to go line by line to eliminate and cut out expenses you don't need. You could look at also travel and other things. Knowing your net and your gross income is an important part of managing a successful business. Even a small business, you should know what your expenses are. Listen, if you're not running some sort of accounting program to help you keep track of that, you're really missing out on a month-to-month, day-to-day opportunity to measure cash flow. I have even gone as far as measuring the risk of losing certain business. I call it at-risk business. And so you can measure out what you're going to gain or lose in a given time period based on what you believe could be happening in your at-risk business. Knowing your net and gross income is very important to managing the success of your business. Is going to help you make important decisions, and it's going to help you to determine whether you should raise rates or not, whether you should cut expenses or not, whether they're necessary or not, and the type of projects and clients that you should be primarily focused on. Because when you look at net income as opposed to gross income, and by the way, there's this other thing that I didn't even mention yet, is cost of goods sold. So it's the cost of making a product to sell it. So that's in process costs. Again, get an accountant to help you with that. But if you have a client that's paying you $100 and your rate's $100 an hour, and you're getting $100 an hour, but it's costing you in time $200 an hour, maybe you need to reevaluate either that client or that type of client or that type of project you're doing, because obviously it's costing you more than you're receiving. Now, if you have a $100 client and it's costing you $20 for that client, you get $80 profit every time you engage that client. That might be pretty good for you. Or maybe it costs you $5 for that client. That might even be better. So you need to understand how your net income really works. You need to dig in, look at your numbers, really look at them, and begin to understand what you're dealing with. Because if you don't know your income, and your expenses, then you're really not operating effectively as a business owner. So just keep that in mind. This, again, is a Business 101 lesson on net income versus gross income. It's really important that you dig into these things. If you don't understand net income and gross income, I'd love to help you. There's a lot of great resources out there in internet world that you can engage and better understand how to work with net income versus gross income. I would encourage you to look at some of the areas that you can get tax deductions in, like retirement. You can write off your phone and internet expenses, education. So sometimes when I get books and magazines, or I go to a seminar, I can write those off. What types of insurance you may be eligible to write off. Your marketing and advertising certainly is a business expense. Certain meals and travel, certain amounts, can be potential write-offs. And of course, there's legal and professional fees that you can write off from your, as part of your expenses for net income. If you have a car that is used for business, you can deduct certain things from that, like either gas or mileage. So you'll want to check into that with your CPA. Travel, of course, is something that you can write off. So you'll want to get with a CPA or an accountant, even if they will charge you a couple $100 for an hour to go through and briefly look at your expenses and tell you whether or not you're doing that right. The other thing I'd encourage you to do is look into some accounting software. Right now, in my opinion, and I've been using this since version, 2 or so, is QuickBooks. I've been using QuickBooks for years. Now, there are other software packages out there. Some of them are virtual. QuickBooks is also a virtual package. You need to find what works for you, what's best for you. And I'd also engage in a software package that your CPA accountant will be able to utilize. In other words, they can get the information from you. But you need to get some sort of accounting package. At the very least, you should be tracking your information in a spreadsheet. Now, obviously, that's a manual spreadsheet. And so if you get into QuickBooks or some other program, that helps you to account for things a lot more quickly, more effectively. You can print out checks, and it follows your register and so forth. So you need to be a wise business owner. You need to understand your numbers. You need to be able to look at gross income and net income and understand what you're looking at. Because I've been doing this for so many years, I can actually look at an income sheet and a balance sheet, which, again, I'm not going to get into those, but I can look at them. And over time, if I look at, history, I can look at numbers and say, there's something going on here in this area. Again, I'm not a CPA, I'm not a financial guy, but I've been around numbers long enough, and I've been around these businesses long enough that I can start looking at numbers and say, there's something wrong here. There's something going on. You need to understand what's going on. And by the way, if you're a business owner that has an accountant or CPA that's in-house, a bookkeeper, you need to be working with them very closely and understanding. Do not ignore the numbers. Do not ignore what they're doing. You need to be aware of everything that's going on in your business. And if you're not signing the checks, you need to be, because you're the business owner and you're the one that ultimately is responsible for what's going on. Don't let someone else sign contracts for you if you have not reviewed them as a small business owner. Now, obviously, at some point in a business, you have to empower employees to make those decisions for you. I can't tell you exactly when that happens, just using a vague explanation, but I think you will know when that happens, and you will have certain procedures and policies in place to help you manage that effectively. I'm Dr. Foster, and I am the success coach with MaximumChange.com. I've been doing this for 25 years, and if there's one thing I do know, it is that this area is fundamentally ignored by most business owners. If you need help with this or other areas in your business, or you just need a little bit of advice or a kick in the tail, be glad to do that too. Go to my website, MaximumChange.com. The link is right over here. I wasn't paying attention to where I was pointing. The link is on this side at MaximumChange.com, and we have everything from some free training all the way up to some private coaching consulting that we'd be happy to engage you with. So we'd love to hear from you. Please like this video, comment on this video, share this video, and maybe there's someone out there that can really use what I've just said, and it would be very helpful to them. Hope you have a great day, and we'll see you soon.